Now, let's talk about Indian Bank, which reported its earnings yesterday. The stock is absolutely flat right now and in the red. In its Q4, the asset quality, of course, deteriorated. Profit after tax came in at 84.49 crore rupees, which was much lower than the same quarter a year ago. Provisions have jumped as well in this quarter. We have the management now joining us, Mr. Mahesh Kumar Jain, MD and CEO at Indian Bank. Mr. Jain, thank you very much for joining us here on NDTV Profit. Can you talk to us a little bit about the quarter? We see stress continuing in Q4 as well.
I will describe the quarter overall as one of the best quarter in the given situation. You know that it was a challenging time for the banking segment. I will highlight three major areas of the bank. One, that as far as capital adequacy ratio is concerned, we are the best, 13.20, and common equity, core equity itself is 11.68%. Second thing, my retail deposit as well as advances have grown substantially. The CASA growth in percentage term, the total component of the CASA has grown by 2.25% over and above the previous year. It is constituting now 31.94%, which was 29.66%, which is a phenomenal increase in any given year, 2.25% share increase. Now, third point basically is about positioning the bank. We are positioning the bank as retail and mid-segment bank. For the profitability is concerned, net profit on sequential basis, quarter on quarter, it has gone up from 42.30 to 84.49%, registering growth of 99.74%. But nevertheless, definitely there is a decline over previous year's quarter as well as on year. And that is mainly because of the additional provision which we have provided for due to AQR. And we have cleaned up the balance sheet. Here I would like to tell that all stress sector, we have completely cleaned up the balance sheet over and above the AQR needs. And in the stress sector, whatever exposure is left out, I don't foresee that there will be further slippages in a large chunk or the large quantum. It will be business as usual.
Right.
And being we have provided higher, that is the reason of these numbers are lesser. Had I neutralized the impact of these additional things what we have done, overall my profit would have grown by 42% over.
Mr. Jain, can you tell us what were the fresh slippages in this quarter?
This quarter total slippages around 3,400 crores against the previous quarter of 1,800 crores. And total slippages in the year is 5,700 crores against the previous year slippages of 2014 of 2,870 crores.
Right.
And as I said, basically it is a conscious decision. Wherever we were harming the inherent weaknesses, where we were finding that there will not be any visible action in the near future. There we have identified those accounts as classified as NPA, and this is a cleanup exercise. And that's why this gross NPA and net NPA number have gone up. But relatively, among the public sector banks, our numbers are still better.
Right. So the fresh slippages that you're talking about at 3,400 crore rupees, can you tell us which sectors really contributed to this big number?
Mainly it is iron and steel.
Okay.
A large chunk is in iron and steel, then followed with power, and then followed with textile to take down. Some portion around 500 crore slippages during the quarter took place in small tickets like agri, MSME, education loan and housing loan. Out of total 3,500. Remaining 2,800 is large ticket account.
Right. Did you make any sale to the ARCs as well? And what about SDR? Was that invoked in this quarter?
Sale to ARC is around close to 1,000 crores during this quarter. And as far as SDR is concerned, during this quarter, there was only one SDR done, around 400 crores. And Flexi, it was done around approximately 200 crores. Now, for the SDR and restructured slippages are concerned, total for the full year, the slippages was 1,465, 22 accounts, whereas upgradation was 1,200. SDR, we are having total 7 accounts amounting to around 1,200, and all accounts have been flagged as NPA. So during this year, wherever the change of management is taking place, I will be getting the upgradation of those accounts. Similarly, on the Flexi restructured, there were total 8 accounts, around 2,400. Out of that, 4 accounts amounting to 1,600 has already flagged. So I'm not carrying any kind of those stress situations.
Right. So, of course, the focus is more and more on recoveries, it seems like. Then where did your recoveries stand in this quarter, sir?
Q4 total recovery was, for the full financial year, it was 900 crores. And in Q4 alone, it was 500 crores.
Right. Sir, can you talk to us a little bit about the kind of disbursements that you've seen in this quarter and how are things really looking like now ahead, because even the interest rate has come down? Any sort of a pickup in the credit growth?
For FY17, my target for the credit growth is around 12%. And as I submitted earlier or said earlier that the bank is positioning itself as a retail and mid-segment bank, and we are going to create the dedicated verticals for retail, MSME and mid-segment. And there we are planning to have the more focus. If you see the composition of the retail book up to 5 crore and above 5 crore as a commercial book, wholesale book as defined by RBI, our composition in the total loan book year after year, 3% increase in the retail book. It used to be 43% in 2014, reached to 46% in 15, and now 49%, and consequential there is a reduction in the commercial book, wholesale book. So moving forward, we are expecting around 12% growth. During this June quarter, generally the June quarter used to be the quarter for the promotions, transfers, posting of the people, and balance sheets, and otherwise also the pickup in the economy and the demand takes place on Q2 onwards, particularly in Q3 onwards. So I am expecting that there may be around 2 to 3% growth only in this Q1, but we will make up this growth as economy.
Right. Sir, do you have any sort of a target in terms of the asset quality for your NPAs, considering all the bad assets, of course, we believe are on the table? Asset quality review has been completed?
Yes. First of all, I would like to tell you that the total stress book of the bank, which is gross NPA as well as restructured, came down from 12.12% in March 15, to 11.46% in March 16. So total stress book has come down. As far as targeting the gross NPA and net NPA numbers are concerned, against 5,700 slippages in 15-16, I don't expect more than 2,000 to 2,500 slippages, which are the normal slippages. So business as usual will be there. Whereas we will be having a lot of upgradation, lot of recovery taking place because of all SDR and other stress assets, and where the resolution is in pipeline, and we may see the resolution. So in view of all those things, I am targeting somewhere around 5.5 to 6% growth.
Okay, so that's an optimistic target for your asset quality. What about fundraising plan? Do you have any plans?
As far as capital adequacy is concerned, we are the number bank among all the public sector banks, having a CRAR of 13.20%. And with a total Tier 1 capital of 12.08 and with common equity capital of 11.68, which is 5.5% higher than the minimum regulatory capital requirement of RBI. So we are a well-capitalized bank. We don't need any capital infusion from the Government of India. Last year also Government infused 280 crore based on the efficiency and profitability parameters. In 15-16 also we have not requested any infusion of the capital, so we are self-sustaining bank. But nevertheless, we have to raise the capital whenever it is suiting to our pricing and the timing. So we will wait. Enough headroom we are having in Tier 2, Tier 1 as well as the equity. We'll wait for the appropriate time for the appropriate pricing.